Hey guys, welcome to yet another lesson. Today we're going to be looking at question 4 of the November 2016 question paper. This one is based on cash flow and interpretation. So this is one of the most important sections of accounting. The question, I think, is about 75 marks, and the previous question had 60 marks. So that's almost half the marks just on two questions that are based on companies. And the following question that follows after this is also on companies. So it's going to be very important to make sure that you understand your companies. And in this lesson, you should then be able to, after watching this lesson, you should be able to complete like a cash flow statement and be able to answer similar questions to this one that may reappear again in the exams. Without wasting any more time, I think let's just jump straight into it. So 4.1, the question there is choose a term from column B that matches the description on column A, and then you write only the letter next to the question number. So we have 4 options there, as well as we have 4 explanations, and then we have also 4 options to choose from. So 4.1.1, it says the ability of the business to pay all of its debts. That's solvency. So we know the first one is C. And secondly, the ability of the business to pay its short-term debts. That is liquidity. And then third one, the benefit that shareholders receive for investing in the company. It's quite obvious. It's the return on equity because they invest equity. The extent to which a company is financed by loans, that is gearing. So let's just put those answers there. So we said the first one was A, that was solvency. So we said C, the first one is C, sorry. So the first one is C. And then after that, we have 4.1.2, where the answer was D, which was liquidity. And then thirdly, it was the return on shareholders' equity. Sorry, and that should have been B. And then last but not least, it would be A, which was gearing. And then for the following question, we are being asked to prepare a note for ordinary share capital. Ordinary share capital, and then the one also of retained income. So let's start with ordinary share capital. So you've been given there in the answer book already the number of authorized shares, and then you also given the opening balance. So the only thing that you need to do is to work out what is the number of shares issued and the amount, and then you need to work out the number of shares repurchased and the amount, and then you can calculate the closing balance. So let's go. Let's find information about shares. So the first piece of information there gives you 900,000 were issued on 1 June 2015. And the second one, it says 75,000 shares were repurchased from the estate of a deceased shareholder at 10.70 per share on 1 October 2015. Okay, so in this case, we'd have to work out obviously the average issue price and then multiply by the 75,000 shares. So the average issue price, for me, if you have to calculate that, you obviously know that at the time you issued the shares, there were these shares that were in issue. So in order to calculate the average issue price, you would simply take the 9,180,000, and then you divide that by 900,000. And then your answer for the average issue price, your average issue price would then be 10.20. So that would be average issue price. And then we would say here, first thing that we do would obviously say 75,000 shares repurchased on, I think it was 15 October. 15 October 2015. And you'd say 1020 multiplied by 75,000. Sorry for the overlap. And that would then give you an amount of 765,000. We get to make sure that we put this one in brackets because it's decreasing our equity when we buy back the shares from the shareholders. And then after that, we then would work out the ordinary shares issued. So the company, so it was 1 October, not 15 October. So make sure you change that one. And then it says here, the company issued 125,000 shares at 10.80 per share on 1 April 2016. So that's 1 April 2016. So the number of shares that were issued is 125,000 shares. So shares issued on 1 April 2016, and then that one was 10.80 multiplied by 125,000 shares, and then that would give us an amount of 1,350,000. 1,350,000, and then you just have to calculate the total. 900,000 shares minus 75,000 shares plus 125,000 shares. That would give you 950,000 shares, 950,000, and then you just say ordinary shares on 30th of June 2016, and then the amount would be 9,765,000. 9,765,000. Cool. And then moving on to the next question, which wants us to work out the retained income note. So one thing that we already know, because they've given us the opening balance and the net profit, the thing that follows is the repurchase of shares. So we know that the shares were repurchased for 10.70 cents, but they were repurchased for 10.70 cents, but the average issue price is 10.20 cents. So the difference between those amounts is 50 cents, and then we multiply, say 50 cents multiplied by 75,000 shares, and that would give us an amount of 37,500. Obviously, it's going to be negative because the reason it's negative is because we are taking out money of our equity to repurchase those shares, and it's cost us a little bit above the average issue price. And then moving on to dividends. So let's just start saying ordinary share dividends. Ordinary share dividends. So for ordinary share dividends, let us see where we can find that information as it relates to dividends. So the first part, okay, on the shares there, they say the 2016 cash flow statement reflected dividends paid of 434,250. But we're doing the balance sheet here, so we're not just looking at the amount that is paid for dividends. So we know, for instance, that when normally what happens is that dividends are usually declared at the end of the year and then paid in the following year. And then the other dividend will be declared and paid during mid-year, and then the last dividend would be declared at the end of the year, and it would be outstanding. It would not yet be paid by the end of the year. So we have shareholders for dividends. So what we have paid this year would be basically the shareholders for dividends of last year plus the interim dividend. So let us go and see if we can find an information that can help us find the amount of interim as well as final dividends for this year. So if you go to dividends right here, there's one thing that's obvious. is that the final dividend, so we have interim and final. The final dividend is obviously going to be shareholders for dividends, which is 209,000. And then in the previous year, the final dividend must have been 162,000. So if we paid, so that 434,000 would be including an interim dividend of the current year, as well as the shareholders for dividends of the previous year. And therefore, in order to calculate the interim dividend, we'd have to subtract the final dividend of the previous year. So we'd say 434,250. So we'd first say interim, and we'd say 434,250, and then we'd say minus 162,000. And you'd get an amount of 272,750. So 272,750, and then we already know that the final dividend is 209,000. That was straightforward. Final dividend is 209,000, and then if you add the dividends together, then you would get obviously a negative amount of 481,250. And then the balance at the end would be 285,750. And that would be your retained income for the year ending on the 30th of June 2016. Thank you guys for joining. Practice more of this. We'll see you in the next lesson. Cheers.